JetBlue and Spirit are ending their $3.8 billion merger plan after a federal judge blocked the deal. Stock market today. Asian shares are mixed as China unveils 5% economic growth target for 2024. Federal safety officials say Boeing fails to meet quality control standards in manufacturing. Today is Tuesday, March 5, 2024, and this is the Dunkley Report, Business News. JetBlue and Spirit Airlines are ending their proposed $3.8 billion merger after a federal judge blocked the deal, ruling it would hurt competition. JetBlue said Monday that even though both companies still believe in the benefits of a combination, they felt they were unlikely to meet the required closing conditions before a July 24 deadline. The airlines say they are mutually agreeing that terminating the deal is the best decision for both. A merger would have eliminated Spirit, the nation's biggest discount airline. The Justice Department sued to block the deal and won in court. Shares are mixed in Asia after China's premier said the country's target for economic growth this year is around 5%, in line with expectations. Hong Kong's benchmark fell while Shanghai edged higher. On Monday, stocks edged lower on Wall Street at the start of a busy week. The S&P 500 slipped 0.1%, and the Dow Jones Industrial Average fell 0.2%. The Nasdaq composite fell 0.4%. Later this week, Federal Reserve Chair Jerome Powell will speak before Congress. His comments could sway expectations for when the Fed will start cutting interest rates. The latest monthly jobs update will also arrive at the end of the week. Federal regulators say they have found multiple instances in which Boeing and its key supplier lack adequate measures to control for quality in the manufacturing of jetliners. The Federal Aviation Administration said Monday that it found problems with parts handling and storage and other areas. The FAA says it has given Boeing and supplier Spirit AeroSystems a summary of findings from a 6-week audit. But the agency isn't immediately making details of its findings public. The FAA has stepped up its scrutiny of Boeing since January 5, when a panel blew off a Boeing 737 MAX 9 over Oregon. Former senior executives of Twitter are suing Elon Musk and X Corp, saying they are entitled to a total of more than $128 million in unpaid severance payments. Twitter's former CEO Parag Agrawal, Chief Financial Officer Ned Siegel, Chief Legal Counsel Vijaya Gadde, and General Counsel Sean Edgett claim in the lawsuit filed Monday that they were fired without a reason on the day Musk completed his acquisition of Twitter, which he later rebranded X in October 2022. Because he didn't want to pay their severance, the executives claim Musk made up a fake cause for their termination. The lawsuit says not paying severance and bills is part of a pattern for Musk. Neither representatives for Musk nor San Francisco-based X responded to messages seeking comment. The flow of millions of small parcels into the U.S. from China, thanks to the explosive growth of online shopping, has caught the attention of Congress. It casts a spotlight on a trade rule allowing parcels valued under $800 to enter the country duty-free. Lawmakers are questioning whether the rule allows manufacturers to avoid tariffs aimed at protecting American companies and to bypass laws barring the imports of illicit drugs or products made by forced labor. Supporters say the so-called de minimis exception helps keep down costs for American consumers and small businesses as online shopping goes global. Custom and Border Protection's Chicago field office oversees one of the nation's busiest ports for de minimis parcels. Thank you for joining us here at the Dunkley Report, Business News. Don't forget to like and subscribe for the latest breaking stories.